Welcome back, guys, to the major markets update, week 2026 this year. Let's have a look at what the major markets have been doing. The concept of managing risk has been very, very important again this week, especially to be seen in the indices. We'll take a look at the Dow at the end of the presentation. Let's start out with gold. We were looking at gold for quite a while. It's always important to stick with the chart, to stick with what you see and what you know. And when you see this 4-year correction without any momentum ending or possibly turning around, you want to stick with the market. You want to buy in the new direction in this case, and just stick with it. When you have a look at the end of the month of June in gold, you can really see how we closed above the balance zone. The reversal at this point here, you have these two fractals and the market is turning on this. And it went more or less straight through the balance zone, and this month with Friday trading already saw a very high increase in price, and it looks like there will not be any fractal on the monthly chart, simply because it seems that price action is really rapid. It's really moving up. The momentum is really there. You can see it here in the momentum oscillator. You do have momentum on the positive side now. We might as well just keep trading to the upside. On the weekly, we have been talking about this a lot. You have your fractal here. You're in this now. The momentum is rising. There's not really any other question to be asked. The reversal move here, you can see it on the monthly. This is where price is moving through the balance zone. Here we already get a move outside the balance zone on the new side. Remember, the trend had been down, and it was down, and it stayed down. Any fractal to the upside that you would have taken failed. And here you have the first one working out, and this is the reversal move coming from the downside on the monthly chart, going through the balance zone to the other side of it. And on the lower time frame, you will already have the first move that is outside of the balance zone on the other side, in this case on the long side, on the buy side. Despite those dips into the balance zone, you had price continuously moving up. Depending on where your stops are, you are in from here now. You may already be in from this fractal, or even from this one down here, depending on how you manage your stops. This is just one trading system out of many trend trading systems that work well. You just have to pick your system and find out how you can use it for yourself, and where you want to put your stop if you want to keep it a little bit wider to ride these moves, maybe sometimes for a year or a year and a half. It's just up to you. The trading system is not that important. It's only 10% of the importance in your trading success. Make sure you focus more on trading psychology and the risk management. The trading system is just 1 out of a million if you want. In silver, you can have the same exact situation as in gold. On the monthly chart, we have moved through the balance zone. We are on the other side now, and this is the best time to get into this market and to buy and buy and buy, simply because this correction is over now. At least that is what the monthly chart is telling us. This month already in silver, we did see a great move. If you take a look at the weekly candle, you can see where it closed the week at 1972, while it opened at 1766, but not too far or not too long ago, we were all the way down here at around $15–16. The same situation applies. You have a downtrend on the weekly. Now you're on the other side. In silver, it's even more clear than in gold that with this closing of last week's candle, all of those extreme fractal breaks here have been left behind. The market is out now, if you want to put it that way. It is on its way to the upside now, simply because we do have a very strong move to the upside. The momentum is also on our side. The breakout buys work really well in such a situation when you see it turning around like that. Let's have a look at the British pound. Last week we took a look already, when you see this weekly chart here, you can see the breakout. However, this wick here is so far up north around 150 that you would have gotten stopped out on this entry, while price is now more than 1500 points to the downside. I mentioned last week that there are other forex pairs involving the pound that may be of interest to you. The British pound Australian, for example, simply gave you a breakout here at this point, and you would simply be short this week, supported your trend entry to the short side. And when you scroll a little bit, you can see that the next support is right here in this area, because when you go to the left, you have your fractal here and you have fractals here. So this zone, if you want, is the next support. But with the pound being damaged like it is right now with the Brexit vote, it might as well just fall through. Let's have a look. Let's just wait and see. Make sure you don't fiddle around with your trades as they are going. You want to keep your winners running. You don't want to cut your winners. Just let them go. You never know how far they will move, and a couple of thousand points on a weekly chart are not a big deal 2 or 3 times a year, and this will really make the difference on your account. It will make a much bigger difference, in my opinion, than trading for I don't know, for 50, 100 or 200 pips on the 4 hour or on the 4 hour chart. The daily is kind of in between. If you really want to catch the big moves, you want to trade high up there, daily or even weekly charts. Let's take a look before we go to the next market really quick, what the daily chart is doing on the British pound Australian. When you want to trade on this time frame, then you already had your breakout at this point and you are simply enjoying the ride now. As you can see, last week a gap opening here, with prices going lower now. Even though this was such a huge candle, we are going at the low. We were closing at 182 while we opened at 194. 1200 points that week, that day, and there's no retracement. Okay, there's no retracement. Let's see where this market is going to end up. We also took a look at the Apple stock chart last week. I don't do stocks, but sometimes it's interesting to look at them, and see what they are doing. The weekly chart here was the subject of our analysis, and the bottom that Apple made in this area is really clear. You have 3 fractals almost at the same point. There are 2 here that have a low at the same point, and the third one actually penetrates that level and goes lower. After the breakout, so to speak, you get prices retracing up to the balance zone, and this is where they found resistance though. They didn't trade into the balance zone, but they found resistance and now came lower to the support. But the strength of the stock market during the last week didn't let Apple break through to the downside, which is what you would expect. The support area had already been penetrated. It retraced, and now you would expect this price really to go down, to move down a lot. The strength of the stock market didn't allow for that, and we have Apple a little bit higher now, penetrating the trend exit line moving average here this week, at the end of this week. You might want to think about tightening up your stops, or thinking about this short altogether, since we are failing at this breakout now for the 4th time. At least it looks like it. The strength in the indices will be the next markets. This will kind of give us a general idea of where we could be headed. While the Brexit week here was quite devastating, with the Dow dropping 1,000 points, you did have the resistance zone up here almost penetrated before the Brexit, but then overnight and on Friday the markets dropped. There was some follow through, and you saw the week closing inside the balance zone, and you actually had this fractal here being taken by this news event. However, as you can see, Brexit never happened. The past trading week made up for almost all the drop of 1,000 points. I think we're up 900 points, and the Brexit week cost us 1,000 point drop. So we are only down 100 points, and we are exactly at the same level where we've been a month ago, 3 weeks, 4 weeks, 5 weeks ago. That just tells you that this market may not drop. It may not come back down here. It may as well make new all-time highs. As you can see, they are not very far away. Maybe we are taking it. Maybe we are finishing off this huge complex correction, and we're coming out. A bounce like this, exactly in the balance zone, exactly between the red and the blue dynamic support levels, is very significant. And if we take the fractals now that are marked by the black line here, you might as well get a breakout, a successful breakout, maybe. Who knows? Who knows? In this market though, you can really see that if you are trading this as a trend trader on the higher time frames, you get whipsawed all the time because the trend doesn't get going. Depending on how long-term your trend following approach is, and depending on where you want to put your stops, you really want to make sure that you're not risking too much, because you never know when the actual breakout of the side move will occur. It will occur at some point, but there are underlyings in on the weekly time frame that can remain in such a mode for a year, for 2 years, 3 years, maybe even more. The Nikkei index was in such a mode, even though it did yield at least some profits in there, for 20 years. So you really want to make sure you manage your risk. Good trading does not come from the hype and from the day trader who is in the markets and who pushes it and who's excited, and at the end of the day he is completely worn out. No. Good trading actually comes from being able to just let the market do whatever it wants to do, let it move, let it present itself, and you being able to perceive the opportunity that the market is giving to you in that moment. And that just means that all you really do is you sit and you wait and you observe whenever there's a signal. You put in your order. You pay very, very close attention to your risk. You want to adjust the risk to the current market phase. If you're a trend trader and you have gold and silver like they are right now, you want to make sure you're pushing it a little bit, and you don't want to exceed the limit of your total account exposure, but you want to push it a little bit on things that are moving your way. That's why you want to hold on to your winners, and you want to increase your position size in those winners at smart points with smart risk management. Don't increase your position size in a way where if the market goes against you because it is not in such a great up move, that your second position or your add-on position will actually remove all the profits you got from your first position. So make sure you pay attention to this very simple math that is involved with risk management. Don't overcomplicate it. Just pay attention to each individual trade's risk as well as your total account exposure, and then see, could you live with losing that much money, maybe in the next 4, 5, 6 weeks, depending on your time frame, or is that too much risk you're taking on? Some people can live with 20% drawdown. Some people can only live with a 15% drawdown. Some people are able to handle a 30% drawdown. And you got to make sure to realize that this drawdown could happen at any given time, because you don't know what happens in the world. You don't know how the central banks, the traders, the hedge funds, and whatever are reacting to certain things that are happening, and you don't know if the next natural catastrophe is right around the corner and will send the markets who knows where. And you want to do this. I mean, this is all based on the premise that we do this for the rest of our lives, and we really change our financial fortune with this kind of approach. This is not just let's collect a couple of pips and make a nice trip. This is life changing. So let's be smart about it. Let's not have our emotions dictate us what we should be doing. We want to be doing what we see in the charts and not what we think about what we see. It's a very important concept. Trading is very, very simple, but it's not easy. The concept is so simple that it's so hard for us humans to actually succeed in it, because we have to do the opposite of what we want to do and where we are drawn to, which are emotional responses and going with the hype, while we should just take a very emotionless and systematic, rules-based approach where we know exactly, just by looking at the chart, know exactly what we have to do when we have to do it. And it's not about the hype. Therefore, since we kind of admit in this way that we don't know what the market is doing, it's really the basic concept to let the opportunities, the trades you want to take, just present themselves. Don't pressure the market. Don't put anything on the market. Just let it go. Follow the flow. Take advantage of the big moves. Increase your position size and limit it when the market is not moving your way. And trend trading can be very, very frustrating, since you get weeks, months, half a year, maybe a year, where you don't have any worthy trend in any of the markets that you're looking at. And that can be very, very frustrating. But again, as I said, this is a lifelong thing, and we want to make sure that we just stay solvent to come back to the game tomorrow and trade again tomorrow, because someday there will be such a huge move, and we're going to be there, and we're going to take advantage of it, and we're going to take our account to a new level. Therefore, pay special attention to the markets that are moving in down or up on a higher time frame, that are breaking out on a higher time frame. Check the markets that have been in a bracketed mode for a long time and put them on your watch list. There will be a break at some point, and that break will end in a huge trend. The longer the side move has been going on, the longer prices have been trading inside the balance zone, the more they are going to explode after they have been asleep, if you want. At this point, we are through with the major developments of week 26 here. Next week, there will probably just be a chart update, since I'm going to take a little bit of a vacation in southern France. Let's see what the markets are going to be doing. The orders are placed, of course. Yeah, and let's just wait and see. Thank you very much for watching the videos, and see you next week.